Hello everyone and welcome to today's More Report analysis videos on Tuesday the 14th of February. The Mirror Japan market analyst at Handtech Markets. We've got a relatively subdued market open, and that's coming on the back of the fact that we've got Janet Yellen's congressional testimony today, her biannual testimony to Congress. Today she's speaking to the Senate Banking Committee. And basically the markets will be looking out for any signals on rate hikes, really. There's an expectation at the moment that there's going to be 2 rate hikes this year. Any sort of questions regarding the impact of fiscal expansion, regarding also the potential for improving growth situation and also improving inflationary expectations around the world could well start to pull out expectations of further rate hikes. So the markets will be looking out for any sort of hawkish hints towards possibly March, but more than likely sort of just to reflect a general improvement that's going on that might sort of mean that the market has to sort of reprice for 3 rate hikes possibly this year rather than just the 2 it's currently got. So the dollar is slightly neutral today, but well, I say slightly neutral, it's sort of been trading around a little bit. We've got Treasury yields. First of all, Treasury yields are sort of around about flat on the 2-year and the 10-year. The dollar, which has been sort of consolidating a little bit, just slightly lower today as the euro's rebounded, but sterling has started to trade a little bit lower. So, and that's come on the back of the inflation data. I'll talk about that. But that is generally where we see the dollar just consolidating a little bit as markets wait for Yellen. You've got equity markets that are basically flat. Yeah, there's not a huge amount of direction at the moment. The only real direction we are getting is off sterling. We've just had out the UK inflation data. UK inflation came in basically just underneath expectations on the headline on the CPI, 1.8 and 1.6. 1.9 was the expectation on the headline, 1.7 was the expectation on the core. But it is interesting because sterling has fallen quite strongly, about 50 ticks against the dollar as we speak. Will that continue? I'm not so sure, because you look down this line here, PPI input prices 1.7%. That is well ahead of expectations, and also the input prices at 20.5% in growth on the year. That is huge in terms of what we're looking at in sort of storing up inflation down the line. So the PPI is the factory gate inflation. Input prices means that producers are going to have to be raising their prices because of raising cost expectations. So that's basically storing up of inflation further down the line, and we could see inflation rising in the future months. But for now, a little bit subdued, but I don't think that's going to last. So it'll be interesting to see how cable reacts to that. Now, further down the line, we've got Eurozone GDP at 10 o'clock. Flash GDP, which is the second estimate of GDP, 0.5% is the expectation there. And also we've got German ZEW economic sentiment. Now, German ZEW economic sentiment is interesting because it is sort of an indication towards growth, and a slight sort of deterioration back towards sort of 15 is just off the top a little bit, but still fairly positive, despite the fact we had German GDP out this morning, which came in slightly underneath expectations. German GDP flash, just slight miss on GDP, but still I think ZEW at 15 would be relatively supportive. So that's what we're looking out for today. So lots going on, especially with the Yellen press conference. I say press conference, congressional testimony to drive market sentiment. So in terms of my chart today, which is Euro Sterling. Now, Euro Sterling had been looking as though it was breaking down yesterday, and that came in front of the UK inflation data, which was marginally disappointing. Obviously the market had been looking at the inflation data and thinking, well, that could be starting to drive a stronger sterling, and you actually had a close below the 84.67 mark, which was the key late January low. It looked like it was going to be putting pressure on this neckline of this head and shoulders top pattern. 84.45 was that support. Breakdown would certainly be retesting the 83 big figure level lows. However, this inflation data has turned around the outlook near term, and it's sort of breaking higher and continuing to go higher as we speak. I mean, just before I started this, the resistance was 85.15. That's now been broken. Now this level here, 85.50, I think we now should be looking out for. If we sort of break above that, that would really be a big sort of turnaround in the sentiment. That would be sort of breaking back higher through to a 1 week high. So I'd say that 85.15 is the level we now need to be looking out for. If you break above that, you sort of really are sort of improving on the outlook. That's the 85.50 level, 85.50, which is so these three highs that we had back in the middle of last week. So that is clearly a key level that the market will be looking out for today. But certainly, in terms of your head and shoulders top pattern, arguably you're still intact on a move on the sort of bearish outlook or the corrective outlook on a move below 86.45. So anything underneath that, you are still looking a bit corrective. But looking at the momentum indicators, it's still holding above 40. You didn't really get that. You've got the MACD lines which are below negative, below neutral, and the stochastics which are falling away, but certainly this rebound today has helped to improve those indicators which were looking corrective earlier today before the data. But this inflation data has certainly improved the near-term outlook. Whether it actually improves ongoing remains to be seen. So watch out for this resistance at 85.50 I would today. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.